Okay, so there is some major news coming out of the Turkish crypto space. A brand new tax law has been proposed. And look, if you trade, hold, or use crypto in Turkey, this is something you're absolutely going to want to pay close attention to. So let's just dive right in and break down exactly what this all means for you.
Right. So the biggest question on everyone's mind is probably this. Are you ready? Because make no mistake, these changes are going to touch pretty much every single transaction and, yep, every single profit you make. But hey, don't worry, that's what we're here for. We're going to walk through this whole thing step by step. All right, so first things first, the government is bringing in two new kinds of taxes. We're going to start with the simpler one of the two, the transaction tax. Just think of this as a tiny little fee that gets applied almost every single time you make a move with your crypto.
And you know, when I say tiny, I really do mean it. The rate that's being proposed is just 0.03%. So this isn't a tax on your profits or anything like that. It's just a very, very small slice of the total value of each sale or transfer you make.
Now, the good news here is that the process is actually incredibly simple for you as a user. You just do your thing, make your trade, do your transfer. From that point on, the platform, your crypto service provider, they handle everything else. They're the ones who do the math and send that tiny tax over to the government, so you don't have to worry about filing this one yourself. So let's just quickly recap the key facts on this one. The platforms, they're the ones paying it. It gets tacked onto sales and transfers. And here's a really important one. Keep an eye on that rate. Right now, it's set at 0.03%, but the president does have the power to change it, to adjust it up or down in the future.
Okay, so we've covered that small fee. Now let's get to the main event. This next tax, this is the one that's on your profits. And it's the one that's going to have the biggest impact on your bottom line for sure.
10%. This is the number to remember. It's the rate they're proposing to apply to the gains, the profits you make from your crypto trades on regulated Turkish platforms. And this is a great way to see the two taxes right next to each other. On one hand, you've got that tiny 0.03% fee that hits every transaction. But then you have the much bigger 10% tax, which, and this is key, only applies when you actually make a profit. Notice the timing too. The gains tax gets handled quarterly, not monthly like the other one.
So the really crucial thing to understand here is that this is a withholding tax, or tifkifat, as it's known in Turkey. And what that means for most people using Turkish platforms is that, again, the platform does the work. You don't have to personally calculate this stuff every quarter. They will withhold 10% of your net profits and send it off to the tax authority on your behalf.
Okay, but you might be wondering, how does the platform even know what my profit is? And that is a great question. This is where it gets pretty specific, because the law spells out a very particular accounting method they have to use. Let's get into how that works. It's called FIFO. It stands for first in, first out, or in Turkish, ilk giren, ilk çıkar. The logic is actually pretty simple. When you go to sell some of your crypto, the law just assumes you are selling the very first units you ever bought. That becomes the cost part of your profit calculation. So let's make this real with a quick example. Imagine you buy one Ether back in January for 60,000 lira. Then you buy another one in February for 75,000 lira. A month later, in March, you decide to sell one of your Ether for 90,000 lira. So which purchase price do you use to calculate your profit? Well, because of FIFO, you have to use the price of the first one you bought, the one from January. So your taxable gain is your sale price, 90,000 lira, minus that first purchase price of 60,000 lira. That leaves you with a taxable gain of 30,000 lira. And the 10% tax will be applied to that amount. Now, there is some good news here. You can actually lower that taxable gain. The law says you can deduct any losses you've had from other crypto trades as long as it's in the same calendar year. Plus, you can deduct any commissions you paid and even that little 0.03% transaction tax we talked about at the beginning. All right, we've gone over the two main taxes and how the profits are actually calculated. Now let's dig into some of the fine print, the important rules, powers, and deadlines that hold this entire system together. So who's calling the shots? Well, the law gives the president the authority to change that 10% gains tax rate. It could go all the way down to 0 or all the way up to 20%. Meanwhile, it's the Ministry of Treasury and Finance that's going to be writing the nitty-gritty, day-to-day rules for how all of this gets implemented. And what about deadlines? For the platforms, they have to declare and pay all that withheld tax for a quarter by the 26th of the month that follows. But, and this is a really critical point for you, if you're making gains outside of these regulated Turkish platforms, the responsibility falls on you to declare that income on your annual tax return. Okay, I know that was a lot of detail, so let's zoom back out for a second and just focus on the big picture. What are the main things you really need to walk away with today? Here it is, all in a nutshell. 2 new taxes are on the way, a very small one on all trades and a much bigger one just on your profits. If you're using regulated platforms, they're going to do most of the heavy lifting with the withholding. Always remember FIFO is how your cost is calculated. Your losses can help lower your tax bill. And finally, if you trade P2P or on foreign exchanges, that reporting task is all yours. And that really brings us to the final big question looking forward. This is a massive step for crypto regulation in Turkey. So will these new rules bring a sense of stability and legitimacy to the market, maybe attracting more serious investment? Or will the tax burden, especially for very active traders, end up pushing people toward decentralized or foreign platforms? That right now is the big unknown.